Hello, folks. It's Tuesday, September 3rd. It's about 5 p.m. on the West Coast of the United States. In this video, I'll be focusing on the U.S. stock markets. There's a lot of action today that I think is interesting. Let me share my screen and we'll get going here. Let's see, I'm going to start with gold. I said stock markets, but this is part of the stock market story, in my opinion. The fact that as the stock market sold off today, gold actually rose. So, we got a pop down early in the morning, but then as the day wore on, gold pulled back up, bounced off of this support zone. And so anyway, this strong action in gold, in my mind, is bullish. It doesn't look very bullish on the chart there, but relative to what the stock markets did today, that's fine action in gold, in my opinion. Still finding support along this level, basically right at $2,500. So very overbought based on the moving averages, but again, gold's looking good. Silver's not looking as good as gold, but did bounce and similar to gold, it made it all the way to the low of that bar and then bounced a little bit. Currently finding support along the median line of this shift pitchfork. Now we're into the stock markets. NASDAQ, obviously, everything we're looking at is in the daily time frame, with one exception that I'll point out when we get there. So NASDAQ, I pointed out in the last video, we've got this open gap overhead, and that's a sign of weakness. The fact that that price bar right there, or a subsequent price bar, was unable to close that gap is a sign of weakness. And as we can see, price rolled off, and then today really rolled off. And so 3.15%. So that's a big move in the NASDAQ. Looks like we found support on this support resistance zone. There it is, resistance, and then support, so support resistance, we're bouncing from there, rising volume. And again, it wasn't clear. Well, in the last video, we only looked at the Dow, but rising volume as price is declining. And that's not bullish, that's actually bearish. So the fact that volume is rising as the market sells off, that's bearish volume action. So not looking good there, albeit bouncing off of that level. SPX has dropped through support, so we were finding support on this simple trend line for the last, what's that, 2 trading weeks. Today, obviously, fell through that level and then also fell through and closed below this potential support level. Actually, it's a support resistance zone. There it was resistance, support, 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 and support failed. But, dropped down and tagged the 50-day moving average, found support there and bounced a little bit. Again, rising volume, certainly today. In the last video, I was pointing out that on Thursday and Friday's action last week, we were starting to see some rising volume, along with, that candle right there was bullish. That candle in combination with rising volume were bullish, and made me think that we might be seeing a little bit of a rally in the markets. And of course, today made it clear that's not what we're seeing. Let's keep rolling here. Let's see, the Dow again drop, nothing really exciting. This is what we were looking at in the last video, was we focused on the Dow stocks in particular. We lost 1.5% today. I showed this chart, and this chart, this is in the weekly time frame. So this is the only chart that's not in the daily time frame. My point with this chart is just give some thought. If you have a portfolio of stocks, mutual funds, whatever, And of course, if it's a 401k and IRA, you're kind of limited what options you have with that money. You're kind of constrained in those tax advantaged retirement plans. But anyway, just something to ponder. This is back in late 99, 2000, the dot-com bubble, tech stocks made it up to this level. Oh, let me say what this is. This is the tech sector ETF versus the broad S&P 500. So basically in this chart, we're comparing the strength of the tech stocks relative to the overall market. And so dot-com bubble, obviously that was tech stocks, reached up to this level, and then, big decline after the bubble popped. Well, interestingly to me anyway, here we are, and AI bubble, some people think, and we've reached that level again, nearly as high as we made it in the dot-com bubble, and potentially we've rolled over from that level. So potentially the AI bubble has popped, if you believe that we're in an AI bubble or were in an AI bubble. And notice the narrative. Internet will change everything. That's what they were telling us back in the dot-com bubble. And now, the AI bubble, AI will change everything. And so the coincidences, similarities in this chart, to me, illustrate what happens when bubbles form and then pop. And so potentially that's what we're seeing. So just wanted to share that chart. Here's NVIDIA. Obviously, key chip stock in the AI bubble, if that's how you want to think of it. We had looked at in last week's videos, that target at 160 based on a potential flag pattern. And then, as I pointed out in my last video, I had made a mistake. It was a mistake. I was not paying attention to volume when I shared that flag pattern with you. Clearly, the flag pattern has failed. In the last video, I pointed out that in Dr. Timothy Morge's work, he didn't look at price patterns. So you wouldn't have heard Dr. Morge talking about flag patterns or head and shoulders or cup and handles. He was not interested in patterns like that. But he would have pointed out that that was an energy coil. And he would have also told us that when an energy coil lets go, when price moves out of an energy coil, it does so impulsively. And of course, that's exactly what we've seen. Oh, he also pointed out that you can't know which way price will break out of an energy coil, although reasonable to assume that the price trend will continue in the direction it was going. So, we're headed up. We get an energy coil, reasonable to assume that price is going to continue higher once price moves out of the energy coil. That's not what we got this time, but we certainly have gotten impulsive action out of that energy coil. I noticed today, as I was preparing these charts, that we also doubled the range. This is another technique that Dr. Morge taught in his advanced work, double the range. And this shows up fairly often in charts. So when price moves in a price channel, so that's what we see here. This is clearly a price channel. We take the width or the range of that channel, we duplicate it, and then we duplicate it's a simple trend line, and we put it up at the top of the doubling. And so that's what we have here is this is a doubling of this range. And notice how NVIDIA reached that level, found resistance there, and then strong drop off. And when I was looking at this chart last week. I hadn't noticed the double the range pattern there. Here we have the Fibonacci retracement tool, Fibonacci, however you want to pronounce that. Notice that the close today is well below the 50% level, which is Dow theory, not Fibonacci, which suggests that NVIDIA may well head on down to the 62% level, which is about 106. It's 105.71. It's kind of hidden there behind that tag. And actually, that's about where the aftermarket trading was. We're about to look at some news relevant to NVIDIA, and this news took NVIDIA lower in the aftermarket trading. Let's take a quick look at the moving averages. Yeah, they're not going to provide support. So I would suggest that as far as downside targets for NVIDIA, we've got the 62% level in this Fibonacci retrace. And then from there, it's down to, the round number at 100 and this support resistance zone. So those are potential downside price targets. Let's look now. So the Department of Justice issued a subpoena to NVIDIA and other companies. And I looked for what are the other companies, and I didn't find anything. So all that we know so far is that after the market closed today, NVIDIA was served with a subpoena, and they're looking at the potential that NVIDIA has violated antitrust laws. So that's what the subpoena is about. This big down movement in NVIDIA today almost makes you think that insiders and potentially big traders knew, well, they would qualify as insiders. I was thinking you might make a distinction between insiders at the company and a big investment bank like JPM or all of the big banks have trading desks. And so you might make a distinction on the word insider between insiders at the company and insiders in the Wall Street information sphere, if you will. And so anyway, I suspect that some people knew that NVIDIA was going to be served with a subpoena today, and that's why we got the big sell-off, part of why we got the big sell-off in the stock. So is there anything else in here? I don't think so. And then this is from Reuters, and they're making this point. Delicate time for AI-related companies as investors recalibrate expectations. And I've pointed that out in previous videos talking about the AI stocks in particular, is that we don't have to necessarily say that AI was in a bubble or that the bubble has popped. But clearly, investors got ahead of themselves with AI technology and then stepped back to reconsider their investments in the AI sphere. And that's the point that Reuters is making here. The rest of these charts were just charts that I found interesting. This is United Health Group. We looked at this in the last video. This is the #1 stock in the Dow 30 based on weighting. And we can see it's 9.38% of the index. Bullish move today, poked up through this resistance level that was, from the prior high, poked up above resistance at the top of this. This is a shift pitchfork, and very bullish candle pushing up through those resistance levels today, increasing volume. Let's look at the indicators. Nothing that's exciting there. So bullish action in United Health. Oh, and healthcare. One of the other charts, we'll jump to it now. I noticed this today. This is consumer staples. And so potentially there is movement towards more defensive sectors of the stock market, which, consumers that's a defensive sector. This price bar from today was very bullish, up here, clearly poked up through both resistance at this level, which, was formed from the prior high, new all-time high, and then up through the upper median line of this modified shift pitchfork. So bullish action in consumer staples sector today. Again, potential that money is moving into defensive sectors, and same thing here. That was my point with UNH, is potentially a movement towards safer stocks. I'm watching my timer. We're at about 16 minutes, so doing okay. This ETF is basically, it's a quick look at the Mag 7. And of course, the Mag 7 and the AI stocks, they're essentially the same. The only stock that's not in here is, I'm forgetting. Anyway, there's only one stock difference between the set of Magnificent Seven and the key AI stocks. And so anyway, when we look at this ETF, we're getting a pretty good view of what's going on in the both Mag 7 and AI, equal weight. And so this is not a weighted index, which again gives us a better view. Weighting an index, it skews things, and not only weighting in the Dow, not only weighting the index, but trading stocks in and out. It's not a consistent measure, because it's constantly being managed. I was about to say manipulated, but I'll use managed as a more polite word. Anyway, back to this ETF chart. Potentially, I pointed this out before, if we were thinking of AI in terms of it being a bubble, well, clearly that is stocks don't grow to the sky, but this one was trying to. The stocks in the AI sector, if you will, there is no AI sector, but that group of stocks trying to grow to the sky. And then they realized, well, we ain't going to make it, and they rolled over on big volume. In the process of doing so, they formed what potentially is an island top. Now, the characteristics of an island top is that we get a big gap at the start of the island. And in the highlight here, if you notice, there's a gap. And there's a gap. Well, actually, it's here. It's a big gap. There's a gap there, but that's the big gap. So we get a gap at the start of the island and a gap at the end of the island. So this is an exhaustion gap, price given up like that. And we want to look for confirmation in volume. And so this isn't the greatest example of an island top, because we did get an increase in volume on this. I'm pointing at my screen. You can't see me pointing at my screen here. We did get an increase in volume on this gap at the start of the potential island, but not a huge, it was not a tremendous surge in volume. Whereas here on the exhaustion gap, we did get significant volume as the gap was letting go, or the island, the island was forming at the end there. So anyway, potential that the AI group of stocks is going to take a rest for now. This stock I find interesting. This again, we looked at in the last video, Dow Components. This is Visa, 4.35%. A double triple top. So I've never noticed this before, and I'm tongue in cheek there. I'm kind of having fun. So notice at this level, there's a top, and today we got another top. So we've got a triple top at this level, and then at the next lower level, there's a top, And if we, well, yeah, there's a top again. And notice that price closed on this candle today, price closed below that level. And so triple top at this level and a triple top at that level. So double, triple top. Pardon me for having fun, but anyway, I thought that was interesting. And here we see this again. This is double the range. So we take the range of this price channel, we double it to get double the range, and notice that price today almost tagged that level before rolling over. Ran out of energy dealing with resistance from these prior highs. So interesting price action in that stock, rising volume for the last 3 days, which, you know, that's bullish action. So nice action in this stock, but a big roll off today. Let's see, what do we got? CAT. This is one of the stocks we looked at in the last video. And I pointed out that price magnets, this another technique from Dr. Morge, when we get an intersection of two pitchforks. And so in this case, we've got the blue Andrews pitchfork is upward sloping, which suggests that the price trend is to the upside. And then this red fork is a shift pitchfork, suggesting that we've got a downtrend going on. And at the intersection of two, at each of the intersections of two forks, we have what Dr. Morge described as a price magnet, that quite often price is drawn into those intersections. And what Dr. Morge pointed out is that when they both moving into a price magnet and moving out of a price magnet, that the movement is often impulsive. And of course, that's exactly what we're seeing today. Price pulled up, or this was Friday's action. Price pulled up into the magnet, and then today we've got price moving impulsively out of the price magnet. And so that was, again, interesting action to me. That's why I'm sharing the chart with you. Rising volume on today's downward movement. What's that? 4.4% down today. Got a bounce on the 50-day moving average and the upper median line of this shift pitchfork. Let's see, Goldman Sachs. This was another stock we looked at. Dow component, 8%. So big segment of the Dow. Triple top. You know, in the last video, I caveated triple top because, again, I was, based on Thursday, Friday volume, I was expecting, or it would not have surprised me, to see upward action in the equity markets. And of course, that's not what we got. And so I'm going to go ahead and, I'm going to call it at this point. I'm going to call it it is a triple top. I'm not going to question that being a triple top based on today's action. So that's all I've got in this video today. I just wanted to share the action in the equity markets today. And again, an abundance of caution, and perhaps I'm overly conservative when it comes to the equity markets. But again, if you have a portfolio of stocks, just, you know, think about what's going on in the world, what's going on in the markets, volatility due to elections, volatility due to the tech sector. Before we wrap up, that's another point let me make. The tech sector is basically supporting all of the equity markets, whether we're looking at the Dow. Certainly, well, the Dow is not as much representation of the tech sector within the Dow 30, the heavily weighted, let me put it that way, within the heaviest weighted stocks of the Dow. AI and tech is not highly represented, but certainly within the SPX and the NASDAQ, obviously in the NASDAQ, basically, this is my point. It's the AI stocks, the Magnificent Seven. That's what's holding the markets up right now, or was holding the markets up right now. And so, again, something to consider is, given the action today, given this subpoena that the Department of Justice has given to NVIDIA, that gives me cause for concern. What are we going to see tomorrow in NVIDIA and the other tech stocks? And of course, we don't know. All we know is that there are other companies that have been subpoenaed. Reasonable to expect that some of those companies were chip companies. And if we look at the chip stocks as a sector, MU, Intel, et cetera, they all got hit pretty hard. I think MU was down 8%, if I remember. But anyway, folks, be careful out there. It's a dangerous world. And so I'm gonna finish. Let me stop sharing my screen. I'll stop babbling. See you soon.